that. So do you see the whole screen right now? Perfect. All right, thanks. I never know with PowerPoint how it's going to work. So basically, I think everyone's pretty much gave the bio. That appreciate very much. Basically, I just want to show you where we are right now in terms of where we manage. So Loudoun County is the first county actually that we started administering. And I was thinking about what Secretary Ring was talking about with respect to helping food co-ops. We actually recently got an inquiry about Lovettsville Co-op, which was potentially interested in having some help financing a new property. So PACE can definitely be used for that. So I'm just, definitely we're seeing interest from the west part of the state, which I'll go into more detail. This is our team. We do have other folks that work with us. This is our core team here. So what is PACE? So as was mentioned before, it stands for Property Assessed Clean Energy. In Virginia, we are able to do commercial property assessed clean energy financing, which is basically anything except for single family homes and anything, and duplexes basically, or up fourplexes. And basically is the way it works is you allow this kind of financing to exist at the state level, and that was mentioned in the bio that we've had legislation on the books for a little bit, but wasn't made viable until 2015, and then I think more viable when we expanded what you can use it for. But basically, you enable it at the state level, and then local governments enable it at the local level via an ordinance. So currently, I'll show later, we have 9 or 10 localities in Virginia have passed ordinances, and 6 of them have active programs. Basically, in a lot of states, including Virginia, you can use this kind of financing for new construction as well as existing buildings. We see it used a lot for new construction, and we're seeing right now in other places, other states, it being used a lot as kind of refinancing. So either refinancing where you've got a need for additional capital. We're seeing it where you were doing a construction project and then you have a capital gap now because your first mortgage lender has reduced what they're going to lend you, or maybe if it's an existing building rehab, they said we're not interested right now, and so we've seen a lot of we actually seen an increase in business overall in PACE financing throughout the country. What makes this kind of financing unique, CPACE, which is kind of the acronym, is that these kind of loans are actually technically a special assessment attached to your property and enforced like a property tax. It's not an actual tax, property tax, but it goes on the assessment roll and it stays on with the property until it's paid off. And the reason why it was created that way is that basically you have a super senior position, in the sense that if you say you get $1 million loan, you pay $50,000 a year to the capital provider, which I'll explain later. If for some reason, the property goes into default or changes hands, that special assessment does not go away. It remains with the property, just like a property tax. So it doesn't accelerate, it doesn't become due. And so because of that kind of long-term nature, the kind of financing, often you have, terms of 20, 30 years, it allows a certain degree of security. And so, lending, although it's done kind of I'll show in a later slide, kind of a 3-part stool where you have the property owner, the lender, and the local government, it is private money. And so the private money says we can really fund a really high level of projects at a good rate because we have this a super senior position in the capital stack, as they call it. So, it's really ahead of the first mortgage, and that's okay because, you basically are going to get the senior mortgage lender to consent because you're going to show it's a good project. You're going to show how you're going to actually increase property value. You actually may be helping them out because perhaps they can't lend as much as they would like, particularly right now. So there's lots of reasons that I could get into another time, but basically it really allows for an interesting structure. I could say I have, we all showed Ben Franklin up here as having created the first assessment district in the country. It's been around a long time, the concept. So if you have, say, a street lighting project or say, for example, you're upgrading the septic system to municipal sewer, everyone in that area has to pay an assessment on their property tax bill or their, statement that they pay until it gets paid off. And so if that happened to my house here in Williamsburg, Virginia, we actually used to be on septic in my neighborhood, and had that been updated while I lived here, to municipal sewer, and I sold my house, the next property owner would still have to pay that assessment. So it's that kind of concept. It's the same general concept. It's been around a long time. It's just being applied in a way that allows private capital to help finance these kind of assessments. And of course, these are property owners who are willing and able. They want to use this financing, so they ask for the assessment. Obviously with things like, I'm going to go ahead and improve the street and everyone on the street has to pay for it. That's something that's done at the municipal level, and you don't really have a say in it. But in this case, of course, property owner says, I want this ability to use this long-term fixed rate financing to do these improvements to my property, or to help pay for a component of my new construction project. So here's examples. And actually, let me just stop a second. I wanted this to be interactive. Does anyone have any overarching questions before I go on? All right, so no one said anything, so I will keep going, and then we'll save the rest of the questions for the end. So here are the kind of property types you can do in Virginia. I mentioned before everything but single family up to 4 units can be financed. Eventually, we think we'll have single family being able to use it, which frankly would be great. I would have used it probably on my house for a bunch of improvements had it been available. It's a long story why it's not available right now, but I think CPACE allows for so much that I think we're in good shape. For example, if you look at it, says agriculture. What does that mean? We've seen wineries use it for water systems. Of course, ground mounted solar can be used on ag land. We've had a number of developers of hemp farms and facilities ask us whether PACE is available in certain states like Wythe County, because they want to be able to help use PACE to help build their facility. So, you're not financing the actual products, but you're financing systems that help make agriculture work, or products that are used in farmland work. So that's something just to keep in mind. And then basically, I want to show you kind of examples of the kinds of things you can do with PACE financing. It's the things you might think of related to energy efficiency, upgraded HVAC, LED lighting, water heater systems, new roof, windows. You can, pumps, all sorts of things. You can also do it on renewable energy, solar, wind, onshore. It has to be actual physical, parcels, so not offshore. Biomass, things like that. So a wide variety of things. What's exciting is that now we can also, since 2019, we can use PACE for resiliency measures and stormwater management. So, and I said critical infrastructure, which is really tied into resiliency, but I wanted to point that out given the challenging times we live in currently. Resiliency is pretty broadly defined. And so what that means is that, if you're in, Hampton Roads, Virginia, and you're on the ocean front, you want to add hurricane shutters or roof bracing for hurricanes, that you can do. If you have flooding, it could be, in Hampton Roads, where we know it's really bad, or even Roanoke, where you have storm surges, things like that. You can use it for flood mitigation. We would like to have it, relate to creating microgrids or, backup generation. So it's basically making your building resilient and your building and land resilient to basically anything related to climate change, disasters in general. In terms of stormwater, I think that could be interesting for those of you listening. When you talk about trying to incentivize new construction projects, whatever they are, because basically we're saying that you can use PACE to fund a portion of some of the stormwater management systems you have to put into your facility to comply with the local regulations and the state regulations, like the BMPs, things like that. So, as regulations get stiffer, in efforts to protect our watersheds, we're trying to say, well, we can help pay for that with PACE financing. And then in terms of critical infrastructure, a lot of things are really covered under energy efficiency or air quality. But for sure, I've been talking to a lot of folks and a lot of the PACE lenders out there who are doing a lot of retrofits for hospitals where you need to increase your airflow and clean the air and things like that. And we definitely think that's part of resiliency, and potentially part of energy efficiency or water efficiency via water cooled systems. But basically, we're trying to say that if there's needs to help existing facility, or you're building a new facility and you have a need to make it safer from a air quality, temperature, air, all things like that relate to how we're dealing with COVID, PACE can be a part of that. I'm thinking of even looking at assisted living facilities. How do you try to make the systems work from an airflow, kind of capacity that makes sure that you're getting cleaner air and it's getting segregated and cleaned more frequently. So just things to think about in general when you think about the kinds of projects you may see in your community that need assistance. So, and I mentioned this before, but I just want to graphically show that it is a public-private partnership in the sense that there's really a benefit for all parties. You're basically, if you're the public, you are allowing this kind through an ordinance. You're allowing this kind of financing to exist in your locality. You are agreeing to allow this kind of assessment to be part of the record that it recorded on the parcel. And if the very few times, and almost never in the commercial so far, there's been an issue, you eventually would enforce it, similar to how you would enforce a property tax deficiency or default. It's very rare in the sense that usually you have other lenders who will, go ahead and pay the assessment because, frankly, like a property tax, you're not going to let the local government take back the entire property for a small amount. So, the PACE, say a PACE loan of $1 million, you never have to pay back $1 million. You're just paying back again that part that is outstanding that year, similar to a property tax. The private component is that you're getting your funding from private capital providers. These are a mixture of commercial banks and then specialty financing entities that were created just for PACE financing. We're really trying to expand that as much as possible to include as many local and regional lenders. We see in the DC market, particularly a lot of community banks have been actively involved in PACE, and we do have Main Street involved, which is a regional lender, but we are actively looking to increase smaller lenders to be in the program because we feel like it offers them another tool actually they can use to help their clients. So maybe, from a first mortgage standpoint, I can only lend this amount in this asset class. But PACE would be classified differently, and therefore I could be a PACE lender as well and be able to help my client achieve a greater overall loan to value for their project. Basically, and so depending on how you structure it, as I say in this blue box, the local government can actually collect and remit payments from the property owner to the private capital provider, or actually you can have it outsourced, where we would do it, the program administrator on behalf of the local government. And in some cases, the capital providers will do their own loan servicing. So it almost, in that way, mimics a commercial real estate finance project, commercial loan. But you always know that at the end of the day, local government has allowed this. Yes, sorry. Do you have a question?
That might have been the sound of someone joining in.
Okay.
It makes
I'm covering a lot quickly, so I'm just,
time.
Yeah, just trying to get through it so we can get to the questions. We talked about how PACE generally works. In Virginia, it's similar to this, I say most states. We do have the addition of resiliency and stormwater, and I really do think that that is something that makes our state unique and really offers a lot of benefits. I was listening to what Secretary Ring was saying about hemp processing, wineries, distilleries, and food co-ops, and all these things we can really help with. We absolutely, of course, focused on trying to install energy efficient measures, renewable, but we also think that resiliency is incredibly important right now. It always has been, but more than ever. And that doesn't have to just mean you're installing a LEED gold building. It really means, how is from an economic development standpoint, how can we really help solve this problem that we're seeing right now in the market? And so just on that note, I wanted to show you which localities have actually passed a PACE ordinance and which have active programs. So I think I may have left off Arlington County there, which no, maybe I did. Well, I have 5 counties, 5 of which are Arlington, Loudoun, Fairfax, Fredericksburg, and Town of Dumfries are active. Petersburg, Virginia is not officially open, but if there's a deal there, we could process it. So it's a matter of just having the kind of a little delay with COVID having like an in-person meeting, which a lot of people want, but it's ready to go. If you need it to be a project, we can do it. But what I want to point out is, you look on this map, you see that Lynchburg and Roanoke have both now passed ordinances, and they're really excited because, as I think was mentioned earlier, there's been a lot of activity out there. I mean, that's kind of a hot area along the 81 corridor and the 29 corridor. We've definitely seen a number of projects being pitched for PACE. The issue we've had right now is, honestly, that a lot of them are new construction, and if you don't have the first mortgage, the construction loan, it's hard to use. You can't use PACE because PACE does not provide the whole capital stack. It's supplemental. So you think of some projects, you have like your first mortgage, and then you have I'll go back here. I'm going to go to a further slide here. It kind of shows it. And here you have like first mortgage loan or construction loan. You have some equity you have to put in. And then, maybe you have other kinds of a bridge loan, or maybe you have tax credits. And so this kind of gives you graphically an example how PACE is really part of that. It's not going to ever, you can't use it to acquire a building. You can't use it to do, in a construction project, you can't use it to pay for the entire construction. But you can use up to 25% of the total budget can be used for PACE. And in I want to replace my lighting on my existing building, it covers 100%. So it typically covers 100% of existing property, and it covers 100% of the eligible measures in new construction project, which is typically 20 to 25% max. And frankly, I will tell you that many construction lenders would be a little bit, they're a little hesitant to say, well, we put 25% of PACE and we have a construction loan, where's the equity? So you always have to have some equity in it. But PACE definitely has been beneficial to either reducing the size of the construction loan, reducing the amount of, equity or preferred equity or mezz debt, or sometimes allowing you to put in, measures you couldn't have done otherwise, like some renewable energy, or maybe a really high efficiency HVAC systems you couldn't do before. Now you can, because PACE can help pay for that incremental cost. So just really quickly, I just want to show you what the benefits are from the two major perspectives. One is for those who are using it, that's the property owners, and one is for you all who work in local governments. So in terms of, now, so Chris, we kind of started, I've only been going for 17 minutes. Do I still get the full half an hour, you think, or?
Yeah, please. We have plenty of time left. We got an hour left in our block, so please.
Okay, all right. I feel like I'm going like a high speed train here, so I don't want to leave people behind. So in terms of benefits, as I mentioned just now, it does offer 100% financing of the eligible project costs, which for an existing building is often 100. That's often the entire project. So as long as the existing mortgage lender is comfortable with it, we're not going to limit what you can do. As long as the PACE lender is happy, your existing lender, if you have one, is happy, we're fine with it. As long as it's showing a project that's eligible, meaning you're installing energy efficient equipment, water efficient equipment, you're putting in, doing a good stormwater project, you're putting in resiliency measures like, hurricane shutters, for example, or flood mitigation, floodproofing. The long financing terms, I think, are really attractive. It's very hard to get 4% money on 30-year loans. Now, PACE is a little higher than that right now. It's in the low fives, but still, for really, really long-term money that's fixed, it's really attractive. And that means that your annual payment, therefore, is much lower because of that. So I think about, things how the SBA, the kind of the CARES Act, EIDL loans have been working, or EIDL, they're a little lower percentage, but, they're very long, loans terms. And that really helps the business owner or the property owner be able to handle those payments. And usually what's attached to the financing, though, is the fact that you are installing equipment that typically is lowering your operating expenses. So if you're installing LED lighting as opposed to just T8s, or if you're installing high efficiency motors, or you're installing solar, you're going to be reducing your energy bill. So, the difference really, you may have like $100,000 a year PACE assessment payment, loan payment, but maybe you're saving 100,000 in energy and water costs or close to it. So the difference is much less than a typical loan that's, I don't know, upgrading your lobby. That has no economic benefit other than rents, which is great, but it's not like a kind of you can't measure it. You can measure the fact that you've seen your utility bills decline 50% or 30%. So that's really an important thing to realize when you look at how the financing works. Also, because it's tied to the property, it's not recourse. So a lot of bank loans, or most bank loans, ask for some personal, basically, guarantees from the sponsors. Because it's tied to the property and doesn't, travels with the property. We don't, there's very little requirements for, and there's no guarantees involved. Now, I mean, certainly, I think some PACE lenders like to see that the sponsor is got some experience in what they're doing, and that it's not some, completely bizarre, property type that you could never, if you took back even, you wouldn't be able to use it again. But basically, it's non-recourse like an insurance company loan would be. The tax benefits remain with the property owner. That means that if you, for example, are using solar and you want to use the investment tax credit, because you own the system, you get to keep the tax benefits from that if you have them. If you don't, you can actually still use power purchase agreements with PACE. It's a little more complicated, but it's absolutely been done. So it works both ways. It just gives you the option of deciding, if I have a tax liability, I can actually keep that. I don't have to give it away. Also, there is a way to show, and we've seen a number of projects, retail projects, where if the tenant's typically responsible for a lot of their, for their HVAC on their roof, hot water, lighting, you can actually have it so that the landlord can use PACE to install it, and they will basically be able to pass through that payment to the tenant as as part of the property tax bill. And some of you may be saying, well, why would a tenant ever want to do that? Like, why would I want to pay the landlord's upgrade of my space? Well, one, you would have had to do it anyway as a tenant. That's your lease agreement. And two, basically, you're installing equipment that has reduced your operating expenses. So we have, examples we could show you another time if you're interested on how that the cost to the tenants go down. The landlord did not have to put up all the money for the HVAC or the roof up front, and that saves them both money. And lastly, I think I've kind of mentioned it before, but because it's transferable in the sense that it stays with the property. So, if I sell my building, the next property owner can continue to pay it. However, you can pay it off. So it's similar to a loan where you can have prepayment penalties, but then after that, you can pay it off just like you would any kind of commercial real estate loan. So it's structured very similarly. For those of you, however, you might find this to be the most interesting from a government perspective. I think what PACE does, I think the biggest sell, frankly, that I see, the biggest benefit to local governments is the economic development goals you're trying to meet. So you basically can have a program administrator like BPA come in, or others as well, but come in and basically run your program. We don't charge anything. This is typical across the country. We don't charge anything to the local government, and we get repaid through deal flow. So it's in our incentive to help, try to go and market and find projects. We want to anyway. That's our mission as a nonprofit. But basically, you're getting another tool in your economic development toolbox at no cost. So if a developer, for example, says, well, I want you to, give me a 2-year or 10-year discount on property taxes, perhaps I've talked to some economic development, directors here locally in the historic triangle, that, instead, we're going to offer you PACE. And so you can get basically another way to pay. You don't have to put this amount out of pocket. You can use PACE financing as another way of, offering your developer an incentive. It also works really well with other kinds of tax credits. It doesn't really mess up the kind of the calculus or the math or the legal entity structure of historic tax credits or new markets or anything. And we've also seen where it's used at opportunity zones. It's, so it's really a great adder to a project in terms of just providing another gap financing mechanism for new construction. And for existing buildings, for example, if you have a derelict building, an empty building, it's something where basically it can help pay for the redevelopment of that project. I think Secretary Ring mentioned something about that, how she had some of her programs help pay for, the feasibility of, say, some assets in the agriculture and forestry areas. Same here, we basically, can't cover all of them, but if you had an older building and you're looking, how can I convert this to, I don't know, workforce housing from an old hotel, for example? Some of the costs, the soft costs of some of the studies could be included in PACE if, PACE is part of that capital stack. So, it doesn't just cover the hard costs, it also covers the soft costs. So that's, I think, is something of value, certifications you may want to get, some of the architectural engineering fees. We're working on a pretty large project in the Fredericksburg area, and we're definitely including a portion of all the fees in proportion to how much PACE financing is compared to the total. So it's a $20 million project, and PACE is $4 million of that $20 million. And the architectural fees are $100,000, and we're saying we can pay $20,000 of that can be put under the PACE financing loan, and that would mean that you would not have to pay that out of pocket. So we kind of went over this slide already. So I just want to show you a few examples of where it's been used. We're really close to having our first project done in Virginia. It's been a while. I think COVID really, our programs have only been loud and opened under a year ago, and Fairfax in March. Yay, great timing. Fredericksburg in July, and Dumfries in September. So we've really had most of our programs open during COVID. So we are trying to get creative about how to get the word out. Nonetheless, I think we're going to be coming up pretty soon, hopefully by the end of the year, knock on wood and any other building material I can find. We should have our first project done, which isn't that dissimilar from what you're looking at here. Smaller amount, but this kind of project. So basically, this is an example of a new construction project in DC, a large project. It was a new soccer stadium, and about 8% was used PACE financing to fund the stormwater management system. DC has very aggressive stormwater management goals and requirements, and it can be expensive to install these filtration systems, stormwater management systems to comply. And so PACE paid for part of that, as well as the LED lighting, as well as some solar PV. So this is just examples, kind of a new construction example on the larger side that's been used, was used recently just to the north of us in DC. And quickly, I want to just show you an example of some smaller projects. One on the left is a nonprofit that basically used CPACE to do a retrofit of an existing property. And that was covered at 100%. New insulation, some new windows, new HVAC. So this is something bread and butter. Say you have a, bank is pretty reluctant right now to lend you money, and you've got failing equipment. PACE can come in and actually provide that financing for you. And then on the right is example of the smaller project. I mean, we see a lot of projects that are, tend to be above 500,000, but this is an example of that you can do a small project too. So this is a project of just about 75,000. Typically our minimum is 50, and that's just because you start getting below that, the cost benefit, because there are some fees involved, is diminished. But I think that we like the fact we can see an individual kind of dairy farmer using solar to a nonprofit using it to upgrade their building, because even though they don't pay property taxes, they can accept a special assessment. So we see lots of nonprofits, we see churches use it, we see YMCAs use it, all sorts of facilities like that are kind of cash strapped, often use PACE. To the larger new construction projects, pre-COVID, lots of hotels. Now we see not so many hotels, or we see hotels trying to change use, but it's been interesting times. And then finally, it's just a quick slide to show you kind of the general steps about if you were a property owner, how you go about filling out an application, getting your documents together, finding a lender, and then how the local government would record this lien, you would start construction, and then you'd be open for business. One thing that's not on this slide is basically how you as a local government can actually get involved. And I can certainly go into more detail, but basically, if you're in a local government that does not have PACE and you're interested in having PACE, we would provide you with kind of standard information, some templates to consider, model ordinance, model financing agreement, program guides, and then we would work with your staff and your local officials to explain why it's basically, in our opinion, a no-brainer, because it's a little staff time, but we will do everything else. And the last thing before I'll stop, I will say that right now in Virginia, there's 3 ways basically you can start a PACE program. You can do it yourself entirely. So you as a local government can say, I want to develop my own program with my own staff. I'm going to issue a RFP and ask for companies like ours to respond to the RFP. The second option is to basically ride an existing contract. So basically, that's what like Norfolk's going to do. I didn't publicly announce them yet, but they're planning to ride our contract. And so what that means is they basically would take our Loudon guide and we would adopt it to Norfolk. Some just minor modifications, but they would take that contract and they could get going right away. The third option is that we have now in 2020 the ability to have a statewide program. And so what's going to happen is sometime this fall, we're waiting with bated breath, DMME is going to release an RFP for a statewide program administrator. So we and others will apply for that. What that means is a local government would still have to pass the ordinance. It still has to, get the buy-in from staff and from your, board of supervisors, but you would be able to, then at that point, you would be adopting the same ordinance, the same legal agreement, the same guide, and you'd be part of the statewide program. So all of us, even though we have to compete for this, we all want this because we want it to make it easy for counties. We want to make it an easy onboarding process, and we want to make it consistent. Because we feel like the consistency across, particularly some of these counties that are small, if you're from Lunenburg and you go over one county and it's different, it's like, who's going to spend the time to figure that out? So we think consistency is important. So certainly that is an option, probably going to be available at this point. I'm going to say second quarter next year, maybe mid-year. It's taking a while to get the RFP out, do the long legislative session, or you can ride, if you have projects now, we're seeing the counties that want to move now, or cities are writing our contract because they need to get the project done. So, the first option, frankly, I wouldn't recommend. It's a lot of brain damage. It's unnecessary. But I'm happy to answer any questions. I only went 2.5 minutes over. So.
Well, thank you, Abby. I really appreciate that rundown. I think there's a lot of confusion about how this works, what it applies to. So really appreciate you taking so much time to really demystify the process. Before I jump in with a question, I'll turn it to our members for anything that they may have.
Hey, Chris, this is John Fant, Grayson County. Abby, that was great. Due to internet problems, I couldn't see your slides, but
I'll send them to you.
I'll circulate all the slides to everyone after. Thank you.
Yeah, but the process for the county up until if the state adopts the overall ordinance, could you talk a little more about what the county needs to do? Do we need to pass an ordinance as part of something in order for us to participate in the program, or we just follow the instructions that you mentioned in the packet once we receive it?
Oh, right. So yes, no matter which option you would choose, every local government has to pass an ordinance so that the local government is given the ability to enforce that lien. So that has to happen. What I'm saying is that I can provide your county with the ordinance that everyone even if we get a statewide, it's going to look a lot like this, the kind of template ordinance, the model ordinance, so that you don't have to recreate it. So that's what Roanoke did. That's what Lynchburg did. So you need to pass an ordinance, but I can give you the information that'll make it a much easier process.
And even until Virginia passes it, we at the county level could still go ahead and do it. We have the authority in this particular case to do that. Absolutely.
So as long as statewide is not passing, the state will not pass an ordinance. They are just now enabled to allow an entity to work at the state level. I mean, Virginia is such a Dillon rule state that basically, unless we said so, you couldn't do it. So it just means that we could be the program administrator for the state, and counties, once they pass an ordinance, can opt into the state program, whomever the program administrator is. But that doesn't change what you have to do now with the ordinance. So yeah, you can do it right away. You can write our contract loud, and that's what Dumfries, Petersburg, and Fredericksburg have all done. And it's been literally like, well, Fredericksburg was a 2-page letter, and they just attached, they said, pursuant to the contract with Loudoun County, we're going to do this program. It was that simple.
Okay.
So, yeah.
Okay. Super. Thanks.
Yeah.
So Martin, did you have a question?
Yes, Abby, I'm Billy Martin. I'm with the Untitled County Board of Supervisors. Can we get some contact information from you?
Absolutely. Yeah. And Chris, I'll get Billy's information. Can you send it to me, or is it something is it on the list of?
I can connect you to, and also at the conclusion of this meeting, I will send out this presentation as well as contact information should there be any follow-up questions.
Okay.
Okay.
Thank you.
Abby, this is Mike Turner. Can you hear me?
Yeah, I can.
I tried calling out. I'm having real fits with my audio, so I want to get this out quickly if I can. I'm on the Board of Supervisors of Loudoun. For some reason, our ordinance is only commercial. It excludes multifamily of 5 units or more. I'm introducing a board member initiative in 2 weeks to change that ordinance so that it aligns with the Virginia program. And I'm doing it specifically because I have a builder who's putting in 380 units of multifamily attached, 2 over 2 stacked, and then an AHU unit of 44 units. And I want the AHU building to be CPACE. He has said the CPACE capital investors really prefer to run the loan for the full 30 years, and he likes paying it off in 2 years. That didn't seem to track with me. Does that make any sense to you at all?
Yeah, okay, 2 things. You're in Loudoun, right? Is that what you said?
Yes.
Yeah,
Yes.
and thank you. I do know about what you all are doing. I really quickly, can you make sure that the resiliency and stormwater is also in that? Because that's going to be really helpful, I think, for your project.
Yeah, if you could send me an email to mike.turner@gov, then we'll sort out the details because I've already submitted the BMI. I want to make sure the language is correct.
Because I've been talking to Dennis Cumby about that, by the way. So, but I'll definitely circle back to you because I've been waiting for this. I know this is happening in November, so that's exciting.
Yeah.
In terms of the 30 years, so what can I say? PACE is being used often kind of like a bridge product. Of course, the PACE lenders wanted to stay on the books for 30 years, but it doesn't have to stay on the book for 30 years. So
Okay.
It's just a matter of preference. They'll have a prepay. After the prepay period, they vary amongst lenders. They can pay it off. So there'll be a prepay penalty like any other loan.
Okay, great. And then can you tell me why Virginia seems resistant to an RPACE program? I've got a house in Waterford that's ideal for rooftop solar, and it's just so frustrating to have no RPACE program, and I don't understand it. Is it the mortgage lenders, the real estate? Is it Dominion that doesn't want to have their energy cut into? What's going on?
Oh my gosh, I could speak for hours, but I won't. And I know that Jerry Gerchik, you probably know him. He of course is very supportive of RPACE.
Jerry and I communicate about 7 times a week.
All right. So, this is the issue in a nutshell. It was very successful. It's billions of dollars of residential PACE loans have been done in California and Florida. What happened is there were some contractors who were unscrupulous. A very, very, very small percentage were bad actors. But the California Mortgage Bankers Association got a hold of that and it made it a federal lobbying effort to kill residential PACE. And what they succeeded in doing is basically making it regulated like regular residential loans. So now it's even overregulated. It was underregulated maybe before, now it's overregulated. What that means is that Renovate America, which did probably $4 billion of that $7 billion, is basically out of PACE now. So we don't have any residential PACE lenders really in the market right now, except for Y Green. We don't have the support of the Virginia Bankers Association or the realtors. They'll kill it every year because they think it's a threat. So what my suggestion is, right now we're in the comment period of the federal government on how these regulations are going to be promulgated. Once that's done in the next year, then I think we can look into going into RPACE. But before that happens, you're not going to see anyone want to move into this market, and you're going to get total pushback from the realtors and the VBA. Absolutely.
Okay, and
There's nothing about it. They don't care.
and that's until they sort out the federal code.
Yeah, I want to laugh about it. It's one of the very few bipartisan things that have happened at the, the federal government is that they the House and Senate all agreed to regulate our pace. Like, yay! I'm glad we're so helpful to be bipartisan. So yeah, but I can
Okay.
have to explain that more to you, Mike, whenever you want. And more.
That's great. Thank you very much. Appreciate it.
See, we probably have time for one more question if there is one. We'll open it up. Or any final words from you, Abby, before we turn to the next page of our agenda?
Just that, what I'm going to do in addition to the slide deck, because I think I'm going to add in there a slide, Chris, that shows that what you need to do as a local government to enable PACE. So that, and then I just want to say I'm going to add that slide. So when you send it out, let me do that one. That way they'll have the information they were asking for, I think.
That would be wonderful.
Yeah, but thanks a lot, everyone. I appreciate the time. Call me anytime. My information is abby@virginiapace.com. But I will reconnect with Billy from Botetourt and Mike from Loudon. I definitely want to talk to you about what's going on there. So thanks a lot. I really appreciate the time.
Thank you so much, Abby. Really, really appreciate the information.
It's nice talking to you again.